Hey, all, Sean Maloney, Digital Business Masters. Hope you're well. Another look at all things blockchain, digital assets on a global basis, macroeconomics and geopolitics, because there's such a lot going on now in 2025 that we would only have dreamed of over the past decade. You know, it's been quite an incredible year so far, and it's only going to get stronger because we can now see where this asset class and this industry is headed, which we've known about for a long time, but it's nice to see other people finally waking up to the fact. So we have a specific blueprint that we've developed over the past decade at DBM, which is how we use digital assets to create cash flow and obviously enjoy equity. We can explain all that. But the fundamental reason that works is because of this information. It's globally connected. People are now interfaced together. We're no longer working in isolated companies, in small markets, or even on continents. We're working globally with some of the best brains, initiatives, ideas, innovations that the world has ever seen. And slowly but surely, people are recognizing how the digital asset class is becoming the new sound money, which will be the first time we've had sound money since 1971. Knowing that is one thing. How to apply that to your life, entirely another, which is why this call is split into two. And if you understand the first part, then you may want to have a look at the second part, which is when we go into the practical steps of converting this powerful information into real life value. You'll find a link to part two in the comments. We're not here to give any advice. We're certainly not financial advisors. We're not qualified to be financial advisors. We don't want to be financial advisors. If you want to carry on being advised by your pension company and bank and insurance companies and boss and governments about how to try and get ahead in the fiat system, good luck. If you want to look at education and how to be self-empowered and responsible and how to take actions that allow you to put yourself on sound money in the digital space, that's what we're here for. But we're certainly not here to give you any advice. Always seek financial education. Why? Well, as I say every week, and I do repeat this every week because obviously this goes out to many, many, many more people than just the DBM community. So the idea is that we keep reminding everyone who falls upon content such as this that the days have gone. They went a long time ago, actually, where you convert skill and time and energy into the accumulation of fiat currency. We don't mind fiat. Yeah, the idea of mining fiat, which is having a job, working, exchanging time for currency, is an anathema when you consider that it devalues in its purchasing power between 8 and 10% per year in real terms. So if you're working as hard as you wish or as hard as you can, and you're applying some of that energy into putting that fiat currency into a bank, for example, and the bank is giving you 0.5% and 1% per year, and you feel like every month goes by in your life and you're getting more and more month and money and you don't understand why, and you're in your 50s and your 60s and your 70s and you're still scratching your head, that's because you've spent huge amounts of your energy in mining fiat. Okay, if you don't know what fiat is, fiat, F-I-A-T, then that's your first problem. Understand what the difference is between currency, fiat, and money, and then start to maneuver your energy and skill towards the accumulation of money, because that's what the wealthy do. We have, of course, the same focus on accumulation of a means of acquisition, a means of purchasing stuff. Of course, that's what you do in life, right? But we don't just use that to go straight into buying liabilities and think that's how life is. No, we convert the devaluing fiat currency into accretive money. And then we use that equity to convert into cash flow to fund liabilities. And once you understand that, which is what we talk a lot about in part two of this session, then you're going to be moving forward more constructively than possibly you are now. And the sooner people realize this, in other words, you fix your own money while we wait, maybe it will never happen in our lifetimes, but bosses, banks and governments have got vested interest to not want to fix the money. So you have to fix your own money. And that involves the acquisition of accretive assets. That's the point. That's what we specialize in at DBM, basically. We do it in 3 basic ways: equity, yield, and equity plus yield. It depends how sophisticated and skilled and organized and resilient and focused you are as a digital business owner. The basic way of doing it is just to dollar cost average Bitcoin and wait for equity. Right? That's the long way of doing it, even though that's a damn sight quicker than trying to do the same thing with a pension or even your own home. Those of us who are more sophisticated understood a while ago through the emergence of what's called decentralized finance that we could get involved with smart contracts and early startups, altcoins, etc., and start to create a yield as well. So we very successfully used technology. Some people are now using what's called grid bot technology, for example, to allocate the equivalent of the US dollar, but in altcoin terms called the USDT or USDC. And we simply allocate some of the equity accrued from our balance sheet, driven mainly by Bitcoin, towards activities that allow us to achieve significant yields per month. We actually target 10% a month. We've done that for years. 10% a month, which is a complete anathema for anybody in the fiat system being advised by banks to put your fiat with them for 0.5% a year. So the whole idea is to understand that this exists, but most of all get educated to actually do it properly, right? Understand how to manage it, because once you do this, you take self-responsibility. That's nobody else is going to look after you. You have to be your own bank. And last but not least, altcoins is all the above, but done on a dynamo. So if Bitcoin's the oil tanker, which is a damn sight quicker oil tanker than the fiat system, so it's still much, much better, but the altcoins are speedboats. Now, they put up with a lot more shock when they hit the sea. Because it's a lot, they get hit harder by the same wave, right? But as long as you know that, and you're able to understand how altcoins, especially as we go into another altcoin season, we expected to be doing that. We expected to be doing that already. But it seems the Leviathan that is Bitcoin, because of its now adoption by bosses, banks and governments, it's delaying the altcoin season somewhat. But if we're in front of it and aware of it, then we're able to position, which is exactly what we do. And we're looking for altcoins, obviously. They don't just provide us equity and a quick, hopeful gain that we hopefully sell at the right time. And, the old-fashioned stuff that people used to do with the altcoin season. No. We also look for altcoins that provide us yield in the same ecosystem. That isn't easy. That takes years of experience to understand who you're dealing with, and most of all, to have the resilience to stay with the project, the altcoin you decided to get involved with. The vast majority of retail people just will not have that resilience. It's just the way it is, unfortunately. But we work with people, obviously, who want to be helped. How do we do that? Well, 5 years ago now, we set up an academy to this whole business model, because we recognize that people need help. And more than that, it's just better to be working in a community of like-minded people who are trying to get to the same place, and respect the fact that it's easier to do that if you work together. Hence, we set up an academy side, and that now sits as the mainstay, the backbone to us being able to keep people gelled together for long enough so that we help each other over the line, rather than work in an isolation or, in a very lonely space, sat behind your own laptop, trying to figure this out on your own. It's not only lonely, but it's dangerous. You need to make sure you're on top of everything. Okay, so decide where you're at from mindset through skills, which is where most people are. Okay, you've got to look at this as a 3, 4, 5 year plan. Roll it out, and when you get good, when you're able to be confident about what it is you're doing with all the technicalities and all the things you've got to think about, strategic, economics and all the stuff you have to be able to understand to be successful, you move up the ranks accordingly. All right. And we just help each other out with various things like workshops and workspaces and calls such as this. Okay. It's quite simple. It's very, very, organized. It's just a case of making sure you sit where you sit. Now, we recognized, a long time ago, but we've come up with this new series now that, especially for people who are relatively new or people who have tried to have a go at something but figured out that it's actually harder than they imagined it would be, go through a 12-month process, basically. So the Wealth Builder series started this month, and it will roll out over 12 equal modules. You're accessing this through your $25 skills subscription. If you're systems and income, you get this, you're grandfathered into this, obviously. And it's a case of making sure you just go through the steps. It'll probably make more sense to people as we go into the later modules 4, 5, 6, 7, because that's when you take a lot of the groundwork done in modules 1 to 3 and start to put it rubber on the ground. Yeah. Well, that's done over a staged process, because this is a process. It's not a hit and hope. We've realized that people would be very willing to get involved with things that they don't really understand and put more than they should possibly into these types of things, hoping that it will be a done deal, quick button, get money quick thing. There's no such thing as get money quick. You have to work through the processes and have the resilience to do so. So this series is designed to help people stay the course through patient, measured steps. Yeah, we know everybody wants everything done yesterday. We know everybody wants to make things happen quicker than they need, especially if they're getting into later stages in life. But the whole idea is it doesn't work fast. Nothing works fast. I think everybody knows that deep down. Right. So to make sure that we remain highly effective and confident and competent and resilient and focused, every week it's important as a digital business owner that you're taking a view on what you're picking up from the movements of information and detail coming from the macroeconomic side of society and the geopolitical side of society. Whether you like it or not, if you are going to move closer to the money supply, which is basically what you are doing by acquiring assets such as Bitcoin, whether you like it or not, you have to be cognizant and aware of what is happening at the deepest elements of how society works. Yeah, in a job, you are given the ability to step away and just let the 9 to 5 take over you. Live for the weekend, live for 2 weeks holiday a year, live for Christmas. You're allowed to just let things wash over you and find escapism and do things that avoid the inevitable challenge, which is your purchasing power as you get older. And that's okay. We're not here to judge anybody who doesn't wish to go down this deep. But if you do have an ambition to change the trajectory of your life and provide more opportunity to yourself for the time you're here, and equally provide the next generations, your bloodline, with the ability to not only have a better existence as time passes, but also, frankly, to remedy the fact that the millennials and the Gen Zs, at least on the face of it, over this next few decades, are not going to have the privileges that many of us enjoyed as boomers and Gen Xers. Now, if that's the case, especially given the baby boomers were born in an era of following complete destruction in many Western societies, for the boomers to have had the best of it in the living memories that exist in our epoch, it is thoroughly irresponsible for the boomers and the Gen Xers to have passed down so much debt onto their children and great-grandchildren. The irresponsibility is profound. It's weak men building weak times. So now we need strong men to build strong times. Right? That's the whole point. That, unfortunately, in my life experience, has not been forthcoming by the recent decades of political influence and economic structure. And it manifested itself in 2008. That's when it really hit. And fortunately, by luck or judgment, I don't even know what it is. I probably never will. Technology evolved to a degree that allowed us to at least have a look at an alternative. And that alternative manifested itself as Bitcoin. Even 15 years later, there is still huge misunderstanding and lack of awareness, which shows you how deeply entrenched 5 decades of either complicit or ignorant-led financial education into society as we know it. And anybody over 40 is a product of that. Yeah? Arguably, everybody under 40 continues to be a product of that. But there's a sense, as you can see on the chart here, that that has shifted. And with all the turmoil going on right now in Western politics, which is a pure symptom of decades of pent-up pressure and anxiety and disparate opinion and disenfranchisement, you can see now that things are shifting and not before time. So if we as adults, parents, grandparents, can't take a stock of this, forget the money, forget the wealth, forget all the means that we'll talk about with regards to how to create a steady income in this space. If we can't just take stock as individuals and think about this on a deeper level for our own lives, let alone our children's and grandchildren's lives, then there's something amiss. And it's not going to come from the hegemony of government as it currently is. The signs of it changing, right? But it won't change from the top down to make enough of a difference quick enough for what we need. So therefore, we have to take over, which is what we've done. Okay? So there's no silver bullets in this life, but all you can do is put yourself on the front foot, take a sense check of where we've been over a period of time. This is only 15 years, 15, 17 years, whatever. The whole idea is to put yourself on a train that allows you then to go through a better period of discovery than you might have had staying in the 9 to 5. And that's really all we've done. The best thing of all is we were doing this when things were prior to 2024, right? And you can see, while we had an upwards overall trajectory, there wasn't any real understanding. It was all retail driven. It was all individuals and entrepreneurs and idealists and maxis. Yeah, a lot of cowboys. But it's shifted. It's now shifted. And that's why you see this steady trajectory. The question for Bitcoin, the overriding question for Bitcoin, I don't believe anymore. And if you could zoom in on all this layer here between 2008 and 2017, you'd see this peaks and troughs were just as aggressive, right? They're just so small now relative to where we are today. But the point is, all this peak and trough, this is what they call volatility. The probability of that now ending is pretty clear, because it's the retail end of economics that causes these peaks and troughs, because retail, frankly, don't know what they're doing. But the irony is the retail needs to know what they're doing, which is why people should be financially educated. Because as we now move into this era whereby the institutions and the corporations and the regulators and the bosses and the banks and governments are taking over this asset class, they're not going to put up with major peaks and troughs. They're going to go with what we're seeing, and we've seen now for most of this last 12 months, which is large increase, higher lows, consolidation, large increase, higher lows, consolidation. Now, if you're not cute enough and astute enough to figure out that owning an asset class that does that in real time, is a liquid 24/7, is not owned by anybody, and has a limited supply, if you're not cute enough to recognize that you should own that asset class as a means to driving a balance sheet, then that's where the education comes in. There has been nothing like it ever in human existence. It's a privilege to even be able to have this call. Now, we know all this is the case because we've observed it for so long. We take a trajectory on where we've been, we know where we are today, and you better believe we know where we're going in the future. Now, we can't predict the future, we can't do anything like that, but we can create it. But the only people who are successful in doing that are the people who continue the course and take responsibility. That is made easier to swallow and do when you observe what is going on with much bigger entities than you and I will ever be. And that's the privilege of what we've been observing, particularly over this past 18 months. Only 18 months. Before then, it was a bit of hit and miss. There was too many people. There was a lot of debanking going on. People were being castigated and pushed back by self-interested government policy, and it just shifted. By luck or judgment, it just shifted. I guess one day we'll figure out which one that is. But it doesn't really matter. We focus on what we can affect, and we take advantage of when we can take advantage of it. So all it takes is for us to take a cursory look for 10 minutes every week. That's what this session is really all about. You should be doing this yourself if you're running a successful digital business. But obviously people are in that bridge position often between working a job, still having fiat responsibilities, still going through the process of clearing down debt and, working for the government in many ways through the current systems. That's going to oppress you. That's going to keep you in a place where you're going to not necessarily keep up with things compared to people who do this full time and run full-time digital businesses and have the freedom in the world to do whatever they want to a degree. You've got to manage your business, obviously. So we try to download each week what this is all about. For those of you listening on YouTube, that's why we do this section of this session. Things like Cantor Fitzgerald. If you don't know who they are, then go and have a look. Very, very large investment company in simple terms. Has launched a new Bitcoin and gold fund. Okay, so this is all about sound money. Investors get 45% of the Bitcoin upside. Okay, which is what a lot of, let's say, individuals who, and I wouldn't blame anybody for doing this, who don't necessarily go to the level that maybe the DBM model determines. The DBM model is all about self-sovereignty, self-determination. You're looking after your own things, your own keys, you don't hold it, you don't own it, and all that type of stuff. We're very much at that end of the spectrum. But I would not blame it for 1 second, people who wish to work with these established financial institutions who are looking for upside that's protected. And they're fine giving Cantor Fitzgerald, Strategy, all these other companies a proportion of profits in the form of fees. No problem with that. It's just not what we don't do. We do the opposite of that because we don't trust these institutions. $12 trillion of US, 12 trillion US banks is set to launch its own Bitcoin and crypto custody services. Just another signal of banks generally moving into this space. 12 trillion US dollars. This is why you're seeing Bitcoin just keep going up and up and up. It consolidates and goes up and up and up because people keep accumulating much faster than we ever could. As owners of Bitcoin, pre a certain time frame, all we're doing is slipstreaming this with a tailwind. NASDAQ to invest 50 million in Bitcoin and crypto exchange Gemini. That's as per Reuters just last week. Okay, so Gemini, if you don't know, Winklevoss twins, they got famous through the Facebook era, and NASDAQ have seen something in them. It's some very interesting things going on over at NASDAQ at the moment. It was the world's leading derivatives exchange, the Chicago Board Options Exchange, otherwise known as the CBOE, launches its first continuous futures for Bitcoin initiative. They've obviously watched what's been going on with BlackRock over the past couple of years. Okay, especially in the form of ETFs. And the CBOE want a piece of that, of course. This, again, it's all to do with you can't beat it, join it. They can see where the new money's going. They can see where people are now taking strides. They can see the devaluing nature. They can see the price stock that they've been part of, by the way. But the whole idea is they're going to try and take a piece of this industry as well. There's nothing stopping it now. Nothing stops the train. Obviously, the question always becomes, do you put your life into the hands of these people, just like you may have done with your pension over the past 30, 40 years, or do you hold a bit back into self-sovereignty? That's always going to be the question that you'll hear us talk about at DBM. Domain giant Namecheap now accepts Bitcoin, and it took a sale last week, apparently. Sold a domain over $2 million, which isn't unheard of, as people buy up well-known domains. But that sale was made in pure Bitcoin, which is fascinating. Well done, Namecheap. Condolences to the person who decided to give Bitcoin to Namecheap, whichever way you want to look at it. Saylor just confronted Vanguard. Now, this was a very interesting keynote he did last week that you've seen in the DBM channels. It's well worth watching if you get a chance to spend 45 minutes listening to Mike Saylor. He's now that confident in the adoption of established names such as Vanguard, such as BlackRock, such as Cantor, etc. He's basically saying Vanguard are still not offering their clients direct access to Bitcoin as Vanguard, but they're actually the largest shareholder in Strategy. Right? So this is either mismanagement by Vanguard, it's either brinkmanship by Vanguard, or it's more likely to be them being determined to hold on the face of it the hegemony of the fiat system, but in the background, just as we saw with lots of banks over the past decade, they were saying one thing to their normal clients, to the public clients, the people who don't go into this detail we're talking about today, but behind the scenes, they're doing entirely another. That's just a sign of why we don't have any necessary respect for these long-standing financial institutions, because they play games with people and it's not fair. 540 million lending giant Lending has dropped crypto from all its offerings. And what they mean by that is they've gone 100% Bitcoin. So when you get used to this space, you recognize that you've got Bitcoin, which sits on its own, and then you've got everything else, which is generally called crypto or altcoins, right? Crypto is what we use for altcoins. Bitcoin is Bitcoin. So you're getting certain companies making their stand on where they sit with that. Other companies, the total opposite. It's okay. There's no right or wrong. You just need to decide what your mix is in your business. Ramaswamy's Strive, another new kid on the block, up there with, your strategies, etc. They've now completed a merger, clearing the path to a $700 million Bitcoin purchase, which they plan to start doing immediately, according to his keynote last week. So just again, more momentum. If you don't know who Vivek Ramaswamy is, then look him up and you'll see how influential he has become over this past few years, especially in US politics. NASDAQ requests tokenized stock facilities to be approved by the SEC. Now, this should be like in big blinking lights. This is a massive thing to have taken place announced this past week. This is the doorway to ordinary stocks, the stuff that people have in their pension funds, for example, even though they don't even know what they've got. They know that they've got a proportion of stocks and a proportion of bonds, normally 60-40. Yeah. One of the next podcasts we do at DBM, we'll talk about the death of the 60-40, by the way. If you're still 100% reliant on your pension plan and that particular ratio, then, you might want to look at other things to protect yourself from where this is headed. And part of that is the NASDAQ recognizing that it can, let's say, be more successful as an entity by being a front runner in the tokenization of stock. Now, when we talk about altcoin seasons, just to get a bit more technical, we talk about this more in part 2. But the whole idea is NASDAQ will put that tokenization on some form of rail. And a rail is a blockchain. And there's a lot to choose from, right? But we're seeing very, very strong evidence as to where that particular rail will be sat. Hence, we own that asset. So that's just us, little old us, ordinary people, but we're informed people. We have the insight into where NASDAQ will operate that rail. And if that is the case, then the probabilities of that particular asset going up significantly is what the game is all about, right? So in other words, we're front running again with tailwind into the awareness way ahead of the common person, and even way ahead of the average bank. So that's how we get ahead. We did it with Bitcoin. We do it with all sorts of other altcoins. But the idea that NASDAQ is moving on a particular blockchain is profound. Okay, so it's repeated there again. CEO Adina Friedman, saying tokenized stocks and ETFs are the future as global markets move on chain. Okay, so your job is to figure out what chain that's going to be. And that's how you move forward and front run in this industry. Last but not least, it's all about geopolitics. So geopolitics is just as profound as macroeconomics when you're looking at what's going on here. Much more brinkmanship in the politics side, obviously, much more shenanigans. You've got to keep your eyes wide open. Lots of vested interests, still lots of people politicians who don't understand half of what I've been talking about for the past 10 minutes, but they're learning quickly. They're learning quickly. You know, they're not stupid people, obviously. They're going to catch on at some point. But the brinkmanship is what causes the trouble. Because people love hegemony, especially some of these boomer generation politicians. Yeah, Europe's full of them. The Senate's full of them in the States. You've got to work through that, okay, and hope these people see sense with regards to what they've caused as boomers and Gen Xers for their children and grandchildren, and they now have a duty of care to make something happen that's different. They'll confuse that with protection and keeping people looked after in the old ways. Of course they do, because that's all they know. But the main thing is, of course, people need to be protected, but you've got to move on with the technology. So slowly but surely, especially this past 18 months, you're seeing much more people move across to the awareness of what we do rather than necessarily hoping that everything will work itself out, because obviously that's not going to happen. That manifests itself in the SEC Chair Atkins. Crypto's time has come. Speaking at the OECD Financial Market Week, Paul Atkins said, "We must admit that crypto's time has come." That's fine. That's all we need to know. Compared to his predecessor, that is like night and day. Goldman Sachs expects a wave of rate cuts. This is the next one, obviously. This is on the ground stuff now. A lot of the things we've been talking about so far are very much in the big frame. But what we're expecting, absolutely, as we sit right now, mid-September 2025, we're expecting now, I've heard the latest this morning, in a Monday morning, that it's looking like 100% chance now that the Fed will finally relinquish. We understand why they've been a little bit reticent. We get it. Tariffs, they need to keep some powder dry. But frankly, they've been outplayed. And this is inevitable now because of the labour numbers and what's going on with general inflation, which is a basket of manipulation anyway, because the devaluing nature of the fiat currency system. So if we're looking at 3 cuts between now and Christmas, and we're looking at a few more cuts early into next year, then every Bitcoiner knows what that means. And that's how predictable it becomes. Yeah. It was harder back in 2022. We didn't see necessarily invasions of countries, and we didn't see necessarily, although we understood it, but we didn't know what it would look like, the fallout of COVID, etc. Yeah, we saw a pullback in hard money, gold and Bitcoin, right? Now it's gone the other way. So what have we been doing over the past 4 years? Aware that they've got no choice but to bring interest rates back into a realm that allows them to, and I say this with big quotations, afford their own debt. Obviously, these people who run the Fed, which is now a defunct entity, it's finished, right? What will replace it is a challenge, so it will carry on. But the point is, they just try and try and try again. It's the same in the UK, it's the same in Europe. They try and try and try again to keep this illusion that they are under control and have everything organized and play the game. All we do is sit with our arms folded, watching them by accumulating in the background the inevitable fact of sound money increasing in fiat terms as we move forwards through the epochs, right? That's it. So that's coming. That's why we have the confidence. You don't know what it will end up as. It doesn't really matter. If you're dollar cost averaging and you understand what we talk about in part 2 with regards to using a balance sheet to perpetually place equity onto your P&L and drive that through cash flow with increasingly sophisticated ways and with more and more reliable ways of making sure we put cash flow in our business, you'll understand the power of Goldman Sachs, no less, expecting this to happen. That's fundamental to what it is to run a digital business. Then on the larger scales, El Salvador, okay, it very much spearheaded this whole era that's been driven by countries like El Salvador, thanks to people like Bukele and others, launching the world's first Bitcoin bank this year. That was announced last week. Hong Kong, which still sits as a little periphery, even though it's heavily influenced by China now, obviously, but proposes easing capital rules for Bitcoin. Basically, that's China saying, let's offshore the experiment of what is happening with global digital assets and not necessarily be seen to be doing it on the mainland. That's all that's basically happening there. Okay. So they're going to play the game. You know, they're not stupid, but again, they don't want everything to unravel quickly. Like some political parties don't want things to unravel quickly in the West. The whole Chinese party doesn't want it to unravel quickly there for obvious reasons. So the whole idea was they'll tiptoe into that. That's why they ban Bitcoin and they unban Bitcoin. They ban Bitcoin, they unban. You know, they play the game because most of their people, or most of the world, frankly, just don't understand this level of discussion. Russia considers launching state-backed Bitcoin and crypto bank to combat fraud. Okay, so again, big geopolitics. We've spoken about this for most of the past year. Yeah. The way that Russia has aligned itself with confrontation on the NATO side, which manifests itself as Eastern European battle lines, and the way that they've structured themselves with China and India particularly in funding that ability through oil sales to those countries, which has meant that Russia has actually been perfectly capable of maintaining a unnecessary conflict. It's Putin, obviously, just flexing his muscles and making sure that he's right, because that's just the type of guy he is. Right? The whole idea is, though, at the same time, what they might construe as fraud and sanction, they will work around it. So it's going to be very interesting what happens this week, because I know they're stepping up the sanctions, which is a complete waste of time, but that's what they're doing. But if they can do that via the back door now and put heavy sanctions on China and India to stop buying as much Russian oil, then it will just squeeze the tap. It'll put a knot in the pipe, right? So hopefully this can be enough to shake this thing into sense, because it needs to sense. It's needless dying. It's totally unnecessary. The whole idea is now we seem to be coming to a new era here. But that sentence there with regards to Bitcoin and crypto being part of the fabric of how Russia comes out of this is profound. It is profound. The fact that they're even talking about these same assets that we own as individuals is the message there. But it's just messy and horrible to observe what has to be gone through in order for this sense to be seen. Secretary Bessent, the US Bitcoin reserves are worth 15 to 20 billion. Repeat that every week now, because that is a profound statement from Bessent. And it's just a case of making sure that we see that through. Again, just to give the SEC a shout out there with Hester Peirce this time, looking for ways to attract more retail, which basically means giving more regulation and legislation so that it's safer and easier for people. That's profound. That's what was needed. Hats off to Hester Peirce. Paraguay moving quickly now with their own strategic Bitcoin reserve, mentioned that last week. And last but not least, keeping an eye on Norway. A little bit disappointed in Norway that they're using their sovereign wealth fund to back the weapons, let's say, which has been now exported from America into Europe. But that's a little bit disappointing from Norway, as we heard last week. But notwithstanding, they still have a very significant wealth fund that is increasingly made up of Bitcoin. Okay, so we'll see where that goes. All these political opinions are our own, nobody else's. In terms of, just a reminder then, if you're interested in getting more into this over and over and over every single day, week, month, whichever you decide, then decide where you're up to with your levels within this established, well over a decade business model that we have at DBM, and make it your business to be successful. Yeah, we can't do it for you, but we can certainly show you the steps. More increasingly now, more reliable and sustainable and easier in many ways, but it's on you. It's like going to the gym for the first time, getting a gym instructor and deciding that, yeah, okay, I'll have a few months of guidance here, but then I know I'm going to be on my own at some point. That's the model. That's the way it works. And we're here, of course, for as long as you need as we go through the whole process. Don't forget, the DBM Wealth Builder series is designed to help you with that in your own time with recorded content and support, so you don't necessarily have to be working with the workshops in real time. The Wealth Builder series is there as well too. Go to the site to find out more about that. Appreciate your time. See you on the next call.